Why do we have to follow accrual basis of accounting? And how is it different from a cash basis? Such kind of why questions do occur. Hi, I'm Saujana and I coach corporate executives and business owners to understand finance in the most practical way. Coming across such questions, we have started our Why series. In Why series, we would pick up some important topics and help corporate executives who are working under the finance domain to understand the why of things. This is based on our discussion with business unit heads and controllers that their team members, they know what to do, but they don't know why to do. Why we do what we do is an important question, because if why we do what we do is not known, then the implications can be very costly. It can be in terms of lack of productiveness, lack of proactiveness, lack of efficiency in the team. In order to make a difference to this situation, we have started a Why series. Because getting an answer to why we do what we do helps to create that interest to understand what, when and how of the aspects. In the first video series, in the first video what we're discussing today, we're discussing on accrual basis versus cash basis. Accrual basis is something which is a fundamental accounting assumption. If it is a fundamental accounting assumptions, then where do we find such assumptions being followed? It also is compared with cash basis. First of all, when we look at the financial statements of any entity, it is presented in the form of profit and loss account and a balance sheet. So the accrual basis is something which is followed in the preparation of a profit and loss account or a balance sheet. It's an assumption which is followed for preparation of financial statements. Likewise, there's something called as a cash flow statement, which talks only about cash receipts and cash payments. Here the accrual system is not followed. So all the financial statements, be it profit and loss account or called as income statement and balance sheet, would be prepared on accrual basis. Even though cash flow statements are a part of the set of the financial statements, cash flow statements has only cash in and cash outs, which has a transaction done by the entity. The second parameter for us to understand the accrual basis and the cash basis would be what it deals with. For example, accrual basis has revenue transactions where there is a right to receive established in favor of the business unit, or the expenditure where there is an obligation to pay by the business. If this is taken as a comparison to the cash basis, for a revenue transaction, the business would receive the cash, and in comparison to an expenditure situation, the business would make a payment in cash. So it deals with all the transactions which is right to receive an obligation to pay in an accrual basis, and a cash receipt or a cash payment for a revenue and transaction in cash basis. The third most important aspect we can discuss in this scenario is the nature of transaction. In the accrual basis, the transaction would include prepaid or outstanding for expenses, income received in advance or outstanding in the case of income. However, for a cash basis, it will include all the cash receipts and cash payments only. So the nature of transaction is only the cash receipts and cash payments for cash basis. Fourth, when is it appropriate that we have to follow accrual, and when is it okay that a cash basis is allowed? In terms of accounting, it is appropriate for corporate entities that they have to follow accrual because it is mandated by the Companies Act. So if any business is done in the corporate form of a business organization, where it's a corporate entity which is doing the business, then it's compulsory for them to follow accrual basis. And also, because it's a fundamental accounting assumption, it's assumed that the accrual basis is followed. If it is not followed, then the fact that it is not followed is mentioned. However, if an accrual basis is followed by a corporate entity, no mention of that will be made. Only when if it is not followed, there must be a mention in the financial statements in the notes to account section that these accounts are drafted on the cash basis of accounting. So, logically, all the corporate entities would always have to follow accrual basis because it's mandated by law as well. And all the non-corporate entities, be it sole proprietorship or a partnership, kind of an organization or a business, can follow cash basis of accounting. Lastly, what is the tax implication? If an entity is following accrual basis of accounting, they would pay taxes on their accrued profits. Vis-a-vis, an entity is following cash basis, then they would have a tax implication on these cash profits. To summarize, we were discussing the Why series. Why series is to understand why we do what we do. And the first topic in this, why accrual basis, and we did do a comparison with the cash basis. In this context, we were trying to help to understand the difference on these parameters. Presented deals with nature of transaction, appropriateness, and tax implication. This was largely to help our corporate executives who are working in the finance and accounting domain to understand why accrual basis is used and how can we find that being factored in the financial statements. For example, profit and loss account is presented after following the fundamental accounting assumption of accrual vis-a-vis cash flow statements, which will help us to understand the cash receipts and cash payments. We also understood that accrual basis deals with revenue and expenditure, where it's a right to receive an obligation to pay, whereas cash basis talks about the instances of revenue where cash is received and instances of expenditure where the payment is made. Also, the nature of transactions, the third one being prepaid and outstanding expenses, and income received in advance and outstanding income are the scenarios dealt in accrual basis, whereas cash receipts and cash payments are dealt in cash basis. Fourth, where is it appropriate that the accrual basis of accounting must be used? For all entities which are having corporate form of an organization, whereas a non-corporate form of an organization, they have a choice to either follow accrual basis of accounting or a cash basis of accounting. Lastly, what would be the tax implication? If an entity is following accrual basis of accounting, then the tax payments would be on accrued profits, whereas if an entity is following cash basis of accounting, then the tax implication would be on cash profits. I hope you have liked this Y series and the first video in this, and this particular comparison of accrual basis versus cash basis was useful to you. We would definitely want to hear what are the other topics you would want us to factor in. See you in our next video of Y series.